Why do most people panic in the market while quiet wealth keeps growing? It's a question that cuts right to the heart of building real, lasting financial security. We see it all the time. One side is frantic, glued to breaking news, watching charts turn red, feeling that pit in their stomach with every little dip. The other side? They seem to be operating from a completely different playbook. Their plan looks simple, calm, and somehow it just keeps working. It's not magic, and it's definitely not luck. It's a system. And today, we're going to break down exactly what that system looks like. So, let's get into the real issue. The problem isn't that markets are volatile. That's what they do. The real problem is that most people are investing without a proper safety base. They're building their financial house on shaky ground. Think about it. If all your money is in one place, and that place is exposed to every market swing, of course, every dip is going to feel like a complete disaster. It triggers a fight-or-flight response. Your brain tells you to sell, to get out, to stop the pain. But that's usually the worst possible move. The alternative is to move from that one-account chaos to a clean, layered system. Imagine your financial life organized into 3 distinct layers: a foundation for stability, a middle layer for growth, and a small top layer for higher risk opportunities. This structure is what turns panic into patience. Now, let's talk about what safe stocks really means. It's a term that gets thrown around a lot, but it's often misunderstood. Safe doesn't mean zero risk. There's no such thing as a zero risk investment. What it really means is building a portfolio with a strong, resilient structure. So how do we think about that? First, diversification is key. Don't put all your eggs in one basket. This isn't just about owning different company stocks. It's about owning different types of assets across different sectors and even different geographies. Second, you need a long-term horizon. We're not trying to get rich in a week. True wealth is built over years, even decades, by letting the power of compounding do its heavy lifting. And third, focus on fundamentals. This means looking for companies with strong balance sheets, consistent earnings, and a clear competitive advantage, what some people might call blue chip stocks. An even simpler way to apply this is through a broad index-style mindset, investing in the market as a whole, especially in sectors that serve our everyday lives, like consumer staples or utilities. These are the boring, dependable workhorses of a solid portfolio. This brings us to a core concept of quiet wealth, the core plus calm portfolio. The rule is simple: core first, excitement last. So many investors do it backwards. They chase the hot new thing, hoping for a quick win, and neglect building a solid foundation. Quiet wealth builders do the opposite. They start by building a large, boring core. This part of the portfolio is designed for stability and steady, predictable growth. Think of it as the 80% or even 90% of your investment pie. It's made up of those diversified, fundamental-driven assets we just talked about. Only after that core is firmly in place, after stability is real and not just a hope, do they consider adding a small, separate slice for higher risk. This could be for individual stocks, new technologies, or other speculative plays. But it's always a small, manageable part of the overall picture, an amount you can afford to lose without it derailing your entire financial future. This structure is what allows you to sleep at night, even when the markets are going wild. But a great investment portfolio is only half the equation. You also need a personal money system to feed it. The most effective way to do this is to run your personal finances like a well-organized small business. Your income is your revenue, and your expenses are your costs. The goal is to generate a consistent profit that can be reinvested for growth. A simple but powerful way to manage this is to split your income by rule the moment it hits your account. Forget complicated budgets. Think in terms of 4 main buckets. First, your essentials: housing, food, utilities, the absolute must-pays. Second, your buffer. This is for savings and creating a financial cushion. Third, your long-term growth. This is the money that goes directly into your investment portfolio. And fourth, your guilt-free life spending. This is the fun money for hobbies, travel, dining out, whatever makes life enjoyable. By automating this flow from your paycheck into these 4 buckets, you remove emotion and decision fatigue. You're no longer deciding where your money should go each month. You're simply executing a predetermined plan. Let's double-click on that buffer bucket because it is absolutely critical. Your buffer is your freedom. It's your financial shock absorber. This is typically a cash emergency fund that covers 3 to 6 months of essential living expenses. The primary job of this buffer is to protect your choices. When an unexpected expense pops up, a car repair, a medical bill, a sudden job loss, you don't have to panic. You don't have to raid your retirement accounts or, even worse, sell your long-term investments at the worst possible time, which is usually when the market is down. That cash buffer acts as a shield. It stands between your life's emergencies and your carefully constructed investment plan. It buys you time, it reduces stress, and it allows your growth assets to keep growing, uninterrupted by the chaos of daily life. Without a buffer, you're always one bad day away from a financial crisis. With one, you have resilience. To supercharge this whole system, start thinking like a small business owner in another way. Create more than one revenue stream. One extra income stream, even a small one, can completely change your financial trajectory. I'm not talking about building a massive startup overnight. I'm talking about something simple and consistent. Maybe it's a skill you already have, writing, graphic design, tutoring, that you can offer to just 1 or 2 clients. Maybe it's a small local service you can provide on weekends. The goal isn't to replace your main income, at least not at first. The goal is to generate a steady extra bit of cash each month that you can direct straight into your system. This extra income can accelerate how fast you build your buffer. Once that's full, it can go directly into your long-term investment plan, dramatically speeding up your wealth-building journey. It's about creating more options and more security for yourself. So let's bring it all together. Quiet wealth isn't about being lucky or timing the market perfectly. It's about being calm, disciplined, and systematic. It's built on 3 pillars. First, investing in diversified, safe concepts with a long-term view. Second, running your money with a clear system that automatically allocates your income to where it needs to go. And third, protecting your entire plan with a robust cash buffer that gives you freedom and peace of mind. This is the blueprint. Please remember, all this is for educational purposes only and is not financial advice. Your personal situation is unique, so please consider consulting with a qualified professional. Thanks for watching, and if you found this helpful, be sure to subscribe for more.